Does the real estate market respond to an economic recession or downturn like the stock market does? Let's find out. I wanted to shoot a video talking about how the stock market reacts to recessions or economic cycles versus the real estate market. So I got some charts here. So this chart is a chart of the S&P 500 index. So the big stocks in the top 500 stocks in the stock market just combined together. It's an index of them. And how it's reacted, I got the last 30 years on here because I really wanted to focus in on the last couple of recessions. So this chart is starting in 1990, and you can see through the 90s, the stock market in general went up. You know, it's always little jags, you know, and stuff, but in general it went up. It peaked out at 2271, I think, in August of 2000. And then the recession, what is commonly referred to as the dot-com bust, it was shortly followed by 9/11. Those two things happened in 2000 and 2001. So peaked out 2200 in August of 2000, went all the way down to, let's see if I can catch the bottom, 1100 September 2002. So in a 2-year period, that's a 2-year period, this gray area in here is the actual recession, but the stock market dropped over that 2-year period by 50%, from 2200 to 1100. So a 50% drop. That's a dramatic drop. Holy smokes. Then from 2002 up to 2006, it had a nice rise, and then it hit another peak at 1900 in September of 2007. So I want you to kind of try to remember these when I go over to the stock or to the real estate chart here in just a minute. But peaked out at 1900 in September of 2007. Pretty good sized drop all the way to the bottom, 900 in February 2009. Again, not quite 2 years, but close to a 2-year drop, and a 50% drop again. Now, obviously it had recovered some in between, but another 50% drop. And then we've had a nice run up from 900 all the way up to 3,200 just recently, you know, December of last year. So real nice run up in that 10-year period. Gosh, what did I do? Almost 4 times, 3.5 times. So nice run up. And then we've had, you know, obviously a bit of a drop here recently. So that's what the stock market has done. So let's compare that to what the values of single-family residential real estate has done. So I got a similar time period, not the exact same time period, but this one starts in January 2000. The 90s was just a nice run up, but no recessions, no anything, so nothing entertaining there. And this chart is the Case-Shiller 20-City Composite Home Index Price. So I like this because it takes, there's a lot of technical stuff in here, but the bottom line is it evaluates the typical house from one year to the next. And I don't want to go into all the details of it, but it's my favorite measure of what's the typical median single-family house in the United States. It takes a 20-city composite, which gives you a good snapshot of the United States, and what are the trends, you know, of the price, the value of the median house in the United States. So what we're looking here at is just mostly trends. I want to show you trends. These aren't actual numbers, but the real estate went up from 2000 all the way, peaked out in April of 2006. Now there's a super important thing I want to point out here. This shaded area is the recession, that dot-com/9/11 recession, where the stock market dropped by 50%. Look what happened to the real estate market. It was not affected at all. The real estate market just kept going up during that time. So not all Main Street or economic recessions or stock market recessions cause real estate recessions. And, you know, real estate is local too, but so this is kind of, you know, taking the average of what's going on in the United States in real estate. So, but it just shows a really good trend. It just shows that not all recessions cause real estate downturns. Now, the most recent one, which is what's in most people's memories, obviously did. So just kind of reviewing that one a little bit, it peaked out in April of 2006. Values dropped just a little bit, you know, like, I don't know, hardly any, less than a couple percent, and plateaued for about a year. So from April 2006 to basically April 2007, it's pretty flat. But then, you know, this is the subprime meltdown, whatever you want to say. I think it basically took that year for these home values and people just start to cause financial issues that rippled through the economy. When that started happening, boy, we had a good sized drop. And real estate dropped, in average, I think about 35% around the country. All right, so bottomed out here in May of 2009, had a little bit of a run up. And what that is from like May, June of 2009 to June of 2010, the government was paying people to buy houses. I don't know if you guys remember that, but they were given, like, they started out with this $7,500 tax credit, and then they bumped it up to $8,000 and made it totally forgivable. Anyway, that kind of got this little rise going and got values going up for just a little while. And then that program expired and values kind of went down again a little ways. Not dramatically, but they definitely went down a little bit. They finally bottomed in February 2012. Maybe March 2012, that time frame. All right, then we've had a real nice rise, for like 8 years now. So a real nice rise for like 8 years. So we've been on a really good run as real estate investors. Our houses have been going up in value, which is great for people that bought a lot of houses back in the downturn, landlords. And it's been really good for the flipping business because you can buy a house, rehab it, and it'll sell fast. So the question we have is, where are we at in the cycle? Obviously, this virus has hit America, and a lot of people we're sheltering in place, which is obviously affecting the economy. The real estate market the stock market has already had a significant drop. I think it dropped about 30%. And I'm recording this. Let's see, what's the date today? April 9th. So it's recovered a little bit. I don't know if that's going to last or not, but bottom line is the stock market has already taken a significant hit. The real estate market's been very resilient. I haven't seen any drop in values, at least in the St. Louis area yet. So what the question is, are we at the peak? So this is that same chart. I just kind of made a PDF of it. And I threw some lines on here predicting, where's the market going to go? You know, right here in 2020, is this a peak? As in a peak and we're going to have a down cycle, a large down cycle? Or is it just going to keep on running up and up and up? Like just keep extending this rally? So this is line A, continuing the rally. Line B, we're at a peak and we're going to have a significant downturn for a number of years. So those are two options. Option C is, and I think this is the one that most people are buying into right now, where real estate's going to have a downturn. We're going to have a peak, but it's only going to maybe drop like 5 or 10% over the next 6 months or a year, and then continue on its upward trend again. That's option C. And option D is maybe a little bit bigger drop, maybe 15 or 20%, and then plateauing and just kind of staying there for the next 6, 7, 8 years. So those are the options out there. There's probably a ton more options, but I threw these on here because I love feedback. I love to know what people are thinking. So give me your opinion. Throw it in the comments below. First of all, subscribe if you like this video. Secondly, throw it in the comments below. What do you think? Is the real estate market going to keep on going up in values as an A? Are we peaked and we're going to have a significant downturn over the next 10 years as in B? Are we going to have have we peaked and we're going to have a minor downturn for 6 months to a year and then continue our upward rise? That's C. Or are we going to have a bigger downturn but then plateau for a while? That's D. Let me know what you think. I'm excited to see what everybody else is thinking out there.